You've brought us 3 ETFs that kind of focus on that. So let's get into those ideas. ProPicks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, so the first one, we've talked about gold. So you've just got a way to own gold, which is the bullion ETF, ZGLD. Talk to me about, I guess, the case for owning in a consolidation phase,
right?
And to what have you seen in terms of the flows, right? This is one of a BMO product that you guys have, but you must also get a lens into demand.
Yep.
Because of interest in this ETF over the last couple of years.
Yeah, absolutely. I mean, I think the demand has been driven by, again, the need for that hedge when it comes to potentially inflation risk. As we move into 2026 and 2027, again, if we're talking about extra government spending, if we're talking about potentially, the I don't want to say the debasement of the domestic currency, but I do think that's becoming more and more of a risk. If we're talking about the balkanization of trade, then we need to think about inflation and hedging against that inflation risk over the medium to long term. And gold has proven time and time again to be that instrument that can provide that hedge. The other angle of it also is the fact that, if you're a believer in this theme that central banks are going to continue to diversify away from the US dollar, then certainly it makes sense to have that exposure to gold within the portfolio. We think these themes are structural. They probably have another year before we're ready to say that the narrative or the jig is probably up on the trade. But if that's the case, then, you want this sort of instrument in the alternative sleeve within a portfolio to offer that diversification that you probably won't get from fixed income going forward.
So you mentioned in a period, though, where you're kind of just waiting on gold to decide what its next move is.
Yep.
And you do see it going higher to 4,500, maybe not the percent gains that we saw in the last year. You do have a covered call ETF on gold bullion.
Right.
So explain how this works. And this is newer.
Yes, this is new. So this is a covered call spread. So it's different than a covered call strategy, right? Where we're writing a call option on the underlying. This time we're writing
I want to pause there because a covered call strategy on something like this would be basically giving you income, mitigating your downside, but limiting your upside.
Exactly.
And so this is different. Tell me how.
This is different because we're also buying back the further out of the money strike, right? So we're selling a call spread, right? So that means that we are generating income because we are selling the structure itself. But at a certain point, we will start participating in topside gain again. Right, so it gives you that upside exposure to gold while at the same time harvesting some income as well.
What does it do for your downside protection, though? Does it leave you more exposed? It's the same. As if you were just having a covered call.
As if you were just having a exposure to gold.
Gold. Okay, it doesn't make it worse to the downside. What kind of yield are we talking about?
So the yield typically, it's close to 5%, right? So it's still fairly attractive on an annualized basis. And again, this is something that we've come up with that really does address the long-term problem of having gold. And the fact that you don't really earn a yield once you do have allocation towards it. So this is something nifty that, we've come up with to address that concern. And something that also does, help with the fact, or at least take advantage of the fact that volatility in gold, when it rises, gold typically rises as well. So
I'm not the smartest person on options, but I do know that some criticism people will bring up about covered call ETFs is like, how actively managed that process is, and are you being opportunistic with your timing, or is it just kind of robotic call writing? Explain to me how that, A, why is that important, and B, how that happens in this ETF.
Right. So, this is probably something that a portfolio manager that manages the fund would be able to explain better than I would. But ideally, you don't want something like this to be automatic and robotic, right? Because there's so many different legs to how an option trades, if we're talking about the Greeks. And managing that takes a more activist approach than relying on something that's a little bit more passive.
So this is active.
This is when it comes to the background of managing the strikes and how far the money they are, there's an element of that too.
Okay.
Yeah.
You mentioned, we talked about the stimulus that is coming out of governments really around the world.
Yep.
But in Canada, you called our federal budget maybe the most consequential, certainly in the last 10 years. And part of that is because of all the spending.
Yep.
And so you would play that, well, Canadian, but this is a global infrastructure fund, the BMO Global Infrastructure Fund ETF. So what is the play? Is that a global fiscal stimulus play?
Yes, it is. Very good way. You basically pitched it for me. But again, if we're talking about moving away from the trade system that we've all been used to, free trade and everyone having low tariffs, low barrier access to each other's countries, that's been a huge growth driver for a lot of developed market economies, including here in Canada. And if we're migrating away from that system, guess what? We're going to need another source of growth to plug in, to offset that. And that's why a lot of governments are turning towards spending, right? And we've seen it time and time again. How many times have we flipped on the news and we've seen reports of, say, a power outage somewhere? Or, earlier this year, I remember this because I was supposed to travel to London. There was an outage at Heathrow Airport, right? That is a signal of aging infrastructure, right? And that's not just a story about Heathrow Airport. We've got that problem all over the developed world. It's a huge opportunity for growth and for spending. Right. And, the advantage of being invested via infrastructure, and I spoke about this earlier, is that you're gaining access to funds. And the underlying is really, investing in, say, an asset that is dependent on inelastic demand and basically monopolistic when it comes to sources of revenues for the most part. Right. And I think is something that should appeal to a lot of investors. And infrastructure, this particular fund has done fairly well this year. And, this is a space, within the alt sleeve that we want to remain invested in for several years from here.
And this, you mentioned it's global, but you'll get nice exposure to Canadian companies.
Yes.
Enbridge, TC Energy are some of the top holdings. In the U.S., you have American Tower, Williams and Company. So big kind of pipeline exposure, electrification exposure, and then some real estate as well. And even though you have those Canadian companies, it looks like 70% exposure to the United States. Okay, interesting. Thank you so much, Bipan. Thanks for bringing these ideas to us.